When thinking of modern day businesses, dealing with cash isn't really something you see anymore. Bank transfers or even contactless payments is what we have all become accustomed to when buying groceries from supermarkets and even shopping at local markets. Paying can now be received electronically. However, there are still businesses out there who operate a cash-intensive system. In today's video, we will be taking a look at what is a cash-intensive business, how they work, and how money laundering in cash-intensive businesses occurs. Hello, and welcome to another KYC Lookup video where we bring you AML related content to help you enhance your knowledge in the fight against money laundering. Before diving into today's video, be sure to subscribe so you don't miss out on any future videos. Oh, and don't forget to leave us a comment with any suggested topics you would like us to cover in the future. We also have a special announcement to make, so be sure to watch until the end to find out what it is. So, on to today's video. What is a cash-intensive business? A cash-intensive business is a business that receives a significant amount of receipts in cash. It is also defined as a business that receives cash payments for services. Examples of cash-intensive businesses include construction, trucking, restaurants, grocery stores, contractors, car wash, retail shops, auction houses, motor vehicle retailers, and jewellery stores and retail businesses, for example. How do cash-intensive businesses work? As mentioned, a cash-intensive business is one that receives a significant payment or receipts in cash. The overall volume of cash taking may be high, and it varies due to the seasonal type of business. A good example of how they work is a car wash. The customer pays the car wash a certain amount of money for a wash service. After the car wash has provided their service, then the customer will pay, more often than not in cash, and then drive away. The car wash at the end of the day will need to count up the profits for that day and should use a bookkeeping service to record the profits and deposit the cash when and where appropriate. How money laundering occurs in cash-intensive businesses. A business with a large number of cash transactions probably uses a cash register. Sales are entered into the register using different keys for different sales. This is done so the owner can determine the cost of sales in each product area. For example, beer sales, dairy sales, soda sales, or grocery sales, for example. Cash transactions are anonymous, leaving no trail to connect the purchaser to the seller, which may lead some individuals to believe that cash receipts can be unreported and escape detection. There are three main ways to misappropriate cash from a cash-intensive business. It can be skimmed from receipts, for example, pocketed before it is recorded. If this happens, it will not be discovered by auditing the books. It can be stolen after it has been recorded. For example, cash removed from the cash register or goods stolen from the shelf for future resale. And a fraudulent disbursement can be created. For example, a payment to a vendor that is actually cashed by the owner's employee. The most significant indicator that income has been underreported is a consistent pattern of losses or low profit percentages that seem insignificant to sustain the business or its owners. Other indicators of unreported income include a lifestyle or cost of living that can't be supported by the income reported, a business that continues to operate despite losses year after year, with no apparent solution to correct the situation, accumulated assets increase even though the reported net profits are low or a loss, debt balance decrease, remain relatively low or don't increase, but low profits or losses are reported. AML obligations which cash-intensive businesses should consider. While most cash-intensive businesses, or CIBs, are conducting legitimate business, they may have no or limited policies and procedures that define internal control systems to ensure the regulatory compliances. These businesses may develop well-defined processes to prevent the risk of money laundering and terrorist financing. But due to weak compliance culture and regulatory environment within the business, some aspects of these businesses may be susceptible to money laundering or terrorist financing. Customer due diligence, or CDD, is a process performed by the business to obtain the facts about a customer that should enable a business to assess the extent to which the customer exposes it to a range of risks. These risks include money laundering and terrorist financing risks. Due diligence aims to identify and verify the prospective customers before onboarding or establishing business relationships. A customer relationship or business relationship is defined as being formed when two or more parties engage to conduct regular business or to perform a one-off transaction. A business, whether big or small, must also apply the customer due diligence measures if the person carries out an occasional transaction that is significant or unusual, whether the transaction is excluded in a single operation or in several operations which appear to be linked. Businesses need to know their customers for several reasons. Here are some of them. To comply with the requirements of relevant AML KYC legislation and regulations. To be reasonably certain that the customer are who they say they are, and that it is appropriate to provide them with the products or services requested. To guard against fraud, including impersonation and identity fraud. And to help the business to identify, during a continuing relationship, what is unusual and to enable the unusual to be examined. Due to the nature of services provided, the cash-intensive businesses are more vulnerable to being exploited for money laundering and terrorist financing. The assessment of the risk of money laundering and terrorist financing affecting the internal markets and relating to cross-border situations. Business operations specific to cash-intensive businesses may allow money laundering risk to develop, providing opportunities for perpetrators to launder large amounts of cash, which are proceeds of criminal activity, by claiming that the funds originate from economic activities. Launder amounts of cash, which are proceeds of criminal activity, by justifying its origin based on fictitious economic activities, both for goods and services. And finance, through often small amounts of cash, terrorist activities without any traceability. The cash-intensive businesses are required to ensure the design and implementation of appropriate AML KYC processes and controls, to ensure that the criminals are not onboarded or services are not provided to them in any manner. A good compliance program should include AML compliance policy and procedures, appointment of compliance officer to monitor AML activities, performance of money laundering and terrorist financing risk assessment, and periodically monitor the money laundering and terrorist financing risks associated with clients. Here are some broader AML requirements that are to be complied with by the businesses that deal in high-value transactions or receipt payment of cash. Appropriately assess the money laundering and terrorism financing risks that they face, including the likelihood and impact of those risks, and to identify and respond to changing risk over time. Include in AML CTF programs appropriate risk-based systems and controls to mitigate and manage the money laundering and terrorist financing risk to which they are exposed. And implement a client monitoring process to monitor the intent of the relationship with a cash-intensive business and their activities to identify potential suspicious acts. As you can see, every business, whether big or small, has a duty to look out for money laundering and terrorist financing risks and report when appropriate. Being vigilant and knowing your business's processes and procedures is an integral part of stamping out money laundering and terrorist financing and stopping the cycle of damage it creates. Well, there you have it. What is a cash-intensive business, how they work, and how money laundering in those types of businesses occur. Now for the special announcement mentioned at the start of the video. We have now launched our very own courses for you to take a more in-depth look at a variety of subjects, such as Introduction to AML, Beneficial Ownership, and Customer Risk Rating, for example. So make sure you visit our website for further details and let us help you connect the dots in KYC. Thank you for watching the video, and if you made it this far, don't forget to like and subscribe to watch more amazing videos.